So today for Gaule's question time, I got the pleasure of being joined by Barbry McGann from Workday Ventures. Hi, Barbry.
Hi, nice to be with you today, Andrew. Looking forward to the podcast.
Good, good. So yeah, could you kick off by introducing yourself and where you are based in that, please?
Sure. So, Barbry McGann, I'm SVP and Managing Director of Workday Ventures. I'm located in the East Bay, California, not too far from our headquarters in Pleasanton. We are an enterprise software as a service company that services both HR and finance applications to the majority of the Fortune 500 and worldwide. We were set up in 2018 to be a strategic CVC and innovation investment arm, if you will, of Workday. And so we look to invest in what we consider synergistic, innovative software as a service companies that can complement the HR and financial applications that we provide to our target markets and buyers.
So in terms of your purpose, then I'd like to run through the five P's of sort of what I've written in my book a few years ago, which gives some structure to what corporates should think about in how they approach venturing. But also, I think it's important for you know businesses that are engaged with you, startups, so they understand the context and that rather than just being a financial investor. So it'd be great to understand a bit more about what's the purpose and objective of why Workday Ventures was set up.
Yes. So it's really to be, I guess, what we call an innovation accelerator for Workday. So really looking out in the market to identify what we thought were innovative, AI-driven now companies that could be synergistic, complementary to Workday. And it's a $500 million fund, so 500 million. It is on balance sheet. Workday is the only LP in the fund. And one of the big perks besides strategic capital is that we automatically put every venture portfolio company that we invest in automatically into our partner program. So this gives the portfolio companies access to our ecosystem and distribution, which is very attractive given that we have such a large customer base globally and so forth. But it's really about strategically looking at the market and identifying complementary solutions that could complement and extend the value to our customers.
Perfect. And the process you go to is the sort of second P. What, do you act as a sort of typical financial investor? How many deals do you look at? And
Sure.
that process
Yeah.
of investment.
So we are strategic, although I would say that we're starting to move over the years to more of a hybrid structure. So we do measure and look at our multiples on investment capital. We do look at our financial performance, but still the primary goal is strategic. We look at, we make about, I would say, on average, 10 investments a year. We don't lead rounds or set valuation. So we're a true strategic. We come in after the lead investor has provided a term sheet to the portfolio company. So we invest alongside lead investors. We have a really robust, we feel very fortunate to have a very robust VC as well as CVC network where we collaborate every quarter with, I would say, around 75 to 100 VCs and CVCs.
Wow. Yeah.
I
Yeah.
would say most of the sourcing comes through referrals. We get a lot of referrals inbound. We're, especially for HR, we're trying to even out the distribution to make sure that we get more applications in the finance space. And also the target buyer for us is the CIO. So more in the infrastructure and architecture of AI applications is another key area and focus for us.
Okay. And the process, you say very much about strategic. You say you're a minority holder. Do you see these as a route for acquisitions?
So we've invested, I'd say, since 2018 in over 70 companies. I would say we have 60 active in the portfolio today. The rest have exited either through M&A or IPO. Of the 70, we have acquired four of our venture portfolio companies. So it's not the purpose of the investment, but we do see a lot of synergy. And if there's a lot of synergy by being a strategic partner in investment, it can then lead to an acquisition. Recently, in the last month, three companies that came through Workday Ventures ended up all being M&A candidates. Flowise started as a venture investment, but quickly became an M&A target. So we turned it immediately over. So if we see that happening, if there's a strong interest from our corporate development arm, we will turn over that company right away so that we keep division lines clear between ventures and M&A. But then two were long-standing portfolio companies, Sana Labs and Paradox AI. Paradox AI has been in our portfolio since 2021. And we saw huge synergy between our two companies where Paradox AI was bringing us deals and we were bringing Paradox deals. So it just became a natural complement, especially for high volume recruiting to Workday. So we ended up acquiring that just recently. And then Sana Labs, we just acquired as our new AI learning platform, but also as the front door for Workday applications.
Okay, great. And you touched on there that you try and keep this demarcation between ventures, which is, you know, you've got do actually, yeah, do you sit on the boards of the companies? What sort of involvement do you have
Yeah,
when you've
we
got
don't
different
have
offices as well?
Yeah, we don't have full board seats, but we are allowed to take observer seats. So we do take observer seats and when we're asked by the portfolio company or when we want to be observer to get on as a board observer. So we do that for multiple of our portfolio companies.
So when you're a minority shareholder and you find those synergies, and then your M&A colleagues sort of say, "Oh yeah, we're interested in acquiring this," do you ventures team you step back and leave the negotiation being done by the founders and by the lead shareholders, I guess, yeah?
Yes, yes, by the corporate development arm will then take over. And the way that Workday Ventures is set up today, so I report into the head of corporate growth, which is Michael Magaro. And Michael Magaro owns not only ventures, but M&A and then integrations. Once we acquire a company, how it gets integrated into our ecosystem. And he reports directly to our CEO, Carl Eschenbach.
Perfect. No, that's great. Okay, that brings us on to the people aspect and that as well. You've just given us an aspect of at what your reporting structure is. Could you give us a bit of a profile of the team members you work with within
Sure.
Ventures?
And one thing I didn't cover off was the process we go through. So
Yeah.
once there's a lead term sheet and once we're engaged with the portfolio company, we do our own due diligence. So we'll go through a product due diligence, making sure that we think that there's a good strategic fit between Workday's applications and the portfolio company. We want to make sure that we're not going to be competing or building organically in the area that we're investing. We want to be true to the portfolio company. So we clear that hurdle. Then we do a technical due diligence because once we put our name or brand behind a portfolio company, we need to make sure that it scales and it has all the privacy and security and AI responsibility ethics that Workday has. We have to make sure it's very aligned technically with our approach in the market. So we do a technical due diligence. We do customer references, founder references, investor references, and then we do financial modeling. And then we write an investment memo, and everyone on the team, and there's six of us, has to agree 100%. If one dissents, then we don't make an investment. And so we'll do an investment pitch and investment memo. Then once that gets approved, then it goes to legal due diligence. And we use outside counsel org to do our legal due diligence.
Mm.
And that's pretty much our process. So we're a pretty lean team. There's four of us now. We just hired an intern from last year permanently. So there's four of us on the investing team. There's myself. And I cover, I would say, broad strategy across all CFO, CIO, CHRO, but I would say my specialty is in CHRO. Then we've got Jeff Wantman, who just came over from Wellington, which is a public-private late-stage investor. So he brings a lot of financial rigor and modeling to the team. And then we have Savannah Green, who came from investment banking as part of the team. So she's also bringing a lot of financial expertise to the team. And then we have Richa Ray, who just joined us from Berkeley, graduating with her MBA and getting started in the team. So there's four of us there. And then we have two on the portfolio experience team. So we have Sarah Spina, who has been at Workday longer than I have. I've been at Workday a decade. She's been there at least 13 years. And she came from the partnership organization. So she really specializes in relationships and helping provide white glove support for portfolio companies, getting them onboarded and integrated to the ecosystem. And then Caroline Rafferty, who also reports to her. And then we also have a dedicated resource in our partner alliance program to make sure that we have technical assistance to help our portfolio companies. And that's the team. And then we all report into Mike McGarrow.
Perfect, great. And you touched on there about the interface, I guess, to the mothership to Workday. How do you find that relationship is? Because I find a number of corporates, that distance between, oh, look, your ventures is dealing with things which are too far out. We need revenue now, and we got our own particular priorities within the core business. How do you find that relationship and make sure that relationship works and builds the synergies
Yeah,
and connections?
I would say we have really tight alignment in relationships with corporate strategy, products across the board, and then alliances and partnerships. And my background, I was an operator. So I've been at Workday over a decade, and most of that time I was in products. And so ran product management across our entire application portfolio. So that really helped us get tight alignment. We put together what we call heat maps, and this really aligns where do we want to organically build, where do we want to acquire, and where do we want to strategically invest or have partnerships. And so we have clear fly zones in which we can invest in and partner. And that has helped really drive close alignment. So I would say that we're very tightly aligned
Mm.
with the corporate ship, if you will.
No, fantastic, fantastic. So that's the internal sort of relationships, I guess. My fourth P is partners, because I very much believe that you're innovating in areas that technically and business model wise are outside what your core business does, and you need to look outside for those. So, who's in your sort of partner ecosystem in terms of funds, startups, incubators, technology places that you work with? You touched on a few of those already, but it'd be great to elaborate a bit more in that
Yeah,
context.
we're very tightly aligned with our global partner organization. And I would say since Carl Eschenbach has come on board, he's really opened up. Workday used to be more of a closed ecosystem. So we had SI partners and we had a couple of software partners, but there was no co-sell opportunity or resell opportunity. And that has changed in the last 2 years. So we've really opened up, if you will, the ecosystem and want it to be a very open, robust ecosystem. So, like I said, every time we invest in a portfolio company, we automatically put them into that partnership organization at no fee. We usually put them in at a standard silver tier, which means that they still have to sell on their own paper. We sell on our own paper, but we do make introductions and do account planning. We've added a lot more strategic partnerships in which we can co-sell or embed and resell some of our portfolio companies. And we have different programs now. There's a Built on Workday program where partners of any size can build out their solution on Workday by being part of the Built on Workday program. Or we have a agent system of record that we just announced in which agentic software can register and be part of an agentic marketplace for Workday and build certified integration to the agent system of record. So there's a lot of opportunities now and we have a very robust, large partner network now of companies of all shapes and sizes.
Fine, fantastic. No, that's a great overview. So the final P in my five Ps is performance measures. And how do your colleagues know that you're doing a good job that within, because you're not just a financial one who's going to take 100 million and turn it into
Yeah.
multiples of that. What sort of performance metrics are you see?
Yeah, we do track opportunities generated. So because they're partner programs, we look at how many of our companies are certified integrations to Workday, and that would be the majority of them are built integration have certified against Workday, which is a really good sign that we have synergistic integrations. And then now we're able to track through our global partner organization opportunities generated, revenue generated. We're able to track co-sell opportunities. So those are all good signs. And then we also do, portfolio performance reviews. So every quarter we look at financially how are the companies doing, what's our a return on invested capital, what's our carrying value to investment cost. So we look at all of those, and I would say all of those factors factor into the performance of our portfolio.
No, fantastic. No, that's a great overview. Thanks for running through those sort of five Ps. We've touched on one of the core areas a few times now, AI, and how agentic AI and that sort of GPT moment that lots of businesses and individuals sort of saw going back a couple of years ago. What's your view and hypothesis now on how that's going to change companies and employment, I guess?
Yeah, I think like everyone else, we see it as a huge revolution, right? We've never seen a technology as disruptive of this, definitely surpassing mobile web, everything that they've said. I do believe it. I'm an optimist, I have to say, Andrew. So I see it as supercharging humans versus replacing humans. I get tremendous productivity internally using the tools that we're authorized to use. But definitely it's going to change the nature of work. Work, all the administration work is going to go away and it's going to be automated. And there's going to be time for more strategic, higher value work, more relationship for building relationships. You can already see that what's happening, say, in HR in the recruiting space, the whole top end of the funnel is being automated, which means recruiters are becoming more candidate engagement managers, right? Really focusing on the people aspects of things. So I definitely see work is going to be transformed, and work today is going to be very different as work tomorrow. And it's across the board, not just in HR, but in finance as well. And we're seeing that and definitely charting forward. We've changed even from the core all the way out to be AI first and really leveraging this trend going forward and see that the new user interface is going to be conversational. It's going to be natural language, conversational user interfaces. So hence the investment in Sana Labs and other areas, but definitely very transformational. But I believe optimistically that it's going to be a supercharger for humans versus a replacement for humans.
Yeah. No, I very much resonate with that because I've seen it on the investment sort of side where we've trialed over the last 2 years a platform that we've built with angel investors to be able to review pitch decks, to be able to do the
Hmm.
initial analysis, to do the initial interviews with the entrepreneurs to enhance the information that they could manage to squeeze into a pitch deck. And then I agree with you as well that one that augments what the teams would have been doing already, but also it's doing things that you couldn't afford to do before.
Right.
Being able to, when you look, and I know from looking at pitch decks, yeah, you do a little bit of a Google search or you do a little bit of a, checking at company's house and doing some of that background. But if that can all be automated and you can provide the support to the entrepreneurs, that becomes phenomenal in that as well.
Agreed, 100%.
But I think the other thing that's interesting is do you change the business model? Because so when we built this investment platform, we've then done the proposition and we've been discussing with like our angel groups and venture funds and CVCs and said, well, look, instead of doing, say, one $5 million investment, why don't you leave AI do 50, $100,000 investments and you're investing alongside those earlier stage investors and your AI model then can support that venture because the expertise, as you're saying, you've got expertise within your fund and within your organization to be able to help those 2 or 3 person startups be able to build their propositions. And I think we then think if that model applies, a corporate like yourself investing in that earlier stage can then be there to invest the next million, the next 3 million, the next 5 million, building on the data that you can have from those
Right.
organizations as they move through that process, rather than just having the occasional observer board minutes. At a later stage, you can be enhancing that. So I think AI does things that you couldn't do before, and
I
it
agree with
also,
that.
yeah,
And we usually our sweet spot is, I should have mentioned this earlier, is Series A and Series B. We like to look and make sure that there's enough traction,
yeah,
product market fit within enterprise targets and markets. But what we're seeing now, I don't know if you've seen this, but Series A are declining because there's such a war for talent right now that
yeah,
if a seed company starts to get the traction that would normally go to raise a Series A, they're
yeah.
getting picked up and so they never get a chance. They're being swallowed. So they never get a chance to be an A. So we are now kind of reconsidering maybe we need to go earlier than A
Yeah.
because they're disappearing. The ones that you want to invest in are disappearing quickly.
Yeah, and I believe that model that I'm talking about, where we've trialed that. I think if you can move forward, because the reason why larger funds and likes yourselves, as you said, didn't want to get involved too soon in it because you didn't know whether they got traction, and the
Right.
amount of overhead that you just talked about that you need to be able to do before you make the investment means it's not economic to do it. But I think AI now gives you that capability. And just think, if your AI can be linking into their accounting system and linking into the CRM systems, which then is to the benefit of the startup because you can say, oh, right, yeah, you're expanding in
Mhm.
this market and you've got customers in these sectors and, oh, we've got experts in those sectors. Now, why can't, we can help you, and or the AI can give that advice and sort of support in that as well. Because you and I know the AI is about the data and the context. It's not just about having a general model. And if you've got all that data and context, then it becomes more powerful, doesn't it? It's
Yeah, what we are seeing though about the early stage is they often don't have a CRM system. They're
right.
often in rudimentary spreadsheets.
Yeah, yeah,
And the market is moving so fast that they really, I mean, they can grow from 0 to 30 million in ARR in a quarter.
yeah, yeah. Wow, yeah.
It's hard for them to predict. We often see very rosy, optimistic financial forecasts.
Oh, we always see those.
Hard,
Yeah,
yeah, but when we look at them, and we do have financial rights through we have a side letter that we insist upon financial rights. And so we do get quarterly financials. And we'll see after the first investment we make, often they miss their targets
yeah, yeah,
because they're new to the market. They haven't learned linearity or predictability. The market's moving so fast too. We haven't seen through a full year yet a lot of our AI investments. Will be interesting to see.
yeah,
We start to see churn because typically these companies are growing so fast that their NRR is like north of 140. So we're not seeing a lot of churn just yet. So it's an interesting time, I think, to be an investor for sure.
yeah, yeah. No, fascinating time, fascinating time. No, Barbara, I think that's been fantastic. You've in just those 20 odd minutes, you've given us a fantastic oversight to and so Workday Ventures and your five P's of your strategy and your people and your partners and your performance. So really appreciate you spending the time and sharing that. Thanks very much.
Absolutely, my pleasure. It was great talking with you, Andrew.